Income tax is one of the most important pillars of India's public finance system. Every year, millions of taxpayers contribute through income tax, and recent budgets have introduced a major transition known as the new tax regime. Understanding this change is essential for anyone earning taxable income in India. India follows a progressive income tax slab system. This means your income is divided into multiple slabs, and each slab is taxed at a different rate. Importantly, higher tax rates apply only to the income above a certain threshold, not your entire income. This system ensures fairness and social equity. For many decades, India followed what is now called the old tax regime. This system allowed taxpayers to reduce taxable income using deductions like Section 80C investments, health insurance under 80D, house rent allowance, and other exemptions. Tax planning became a major part of financial planning under this regime. However, the old tax regime had several limitations. It was complex, paperwork-heavy, and favored people with financial knowledge and disposable income. Many taxpayers invested in products just to save tax rather than to meet genuine financial goals. This increased compliance burden and disputes. To simplify taxation, the government introduced the new tax regime in the union budget. It offers lower tax rates, but removes most exemptions and deductions. The objective is to make tax calculations straightforward and reduce dependence on tax-saving schemes. Under the new tax regime, taxpayers can easily calculate their tax liability without complex planning. With fewer exemptions, filing returns becomes faster, simpler, and more transparent. This system encourages clarity and reduces errors. Choosing between the old and new regimes depends on your income structure. If you claim significant deductions like home loans and investments, the old regime may still be beneficial. If you prefer simplicity and have fewer deductions, the new regime may be better. The new tax regime is especially beneficial for salaried employees, young professionals, and first-time taxpayers. It reduces paperwork and makes tax filing easier, especially for those without complex financial planning. The new tax regime is especially beneficial for salaried employees, young professionals, and first-time taxpayers. It reduces paperwork and makes tax filing easier, especially for those without complex financial planning. The transition to the new tax regime represents a shift in India's tax philosophy, from complex deductions to simplicity and transparency. Understanding this change helps you make smarter financial decisions and prepare for future tax policies. Subscribe to this channel for simple and deep explanations of India's union budget and financial policies.